Welcome to Power CEOs, the truth behind the business. I'm Jen Gaudet, your fearless host, entrepreneur, investor, and business strategist. Why are we here? Because iron sharpens iron. And when we bring amazing entrepreneurs and executives to talk about what's working in business and maybe even some of what's not, we're all able to learn and grow. As a result, our businesses grow, and the ripple effect impacts not only ourselves, our teams, and their families, but also our communities and our world. You are in for a treat. I have a very special friend here in studio for your viewing pleasure. She is an executive, a force to be reckoned with. She is a financial guru who has been in the mergers and acquisition space for quite some time, and she's really passionate about our topic today, which is what are the 7 things that all entrepreneurs need to know or stop doing so that they can actually exit and maximize the asset that is their business. Welcome, please, to the show, Holli Moeini.
Thank you, Jen. Thank you for having me. I'm honored to be here on Power CEOs.
Holli, give me the goods. What are the 7 mistakes?
So what we're going to start with is we're going to expand the scope to include all entrepreneurs because they all have one thing in common. They are all going to exit at one point in time. So whether it's 1 year, whether it's 5 years, 20 years down the road, they're going to exit. Whether it's for retirement, and everybody has a different, reason to exit. But whether you're trying to do a buy and build strategy and create wealth right now, or whether you are trying to actually just have a nice retirement, have a nice life, Jen. So everybody's going there. These 7 things are vulnerabilities that you should do now, but if you're gonna exit, you definitely need to not make these mistakes.
And it's so right. And I can't tell you how many entrepreneurs, because I've coached literally thousands of entrepreneurs over the last decade, if you will. And they never think about exit. They think they're going to just retire in the sunset and their business is magically going to provide for them. Or they think that they're just going to close up shop when they're done, which is kind of missing the point on your life's work. So give me the goods, because I think everyone who is listening can't wait to get this.
Excellent. Okay, so the first thing I'm going to start with is something that we love, but most CEOs and entrepreneurs maybe not like it, but you got to plan for it. So the very first thing is, if you're going to go to exit, you must plan to maximize your value. That is a must. And I recommend at least 3 years. I like to have a little bit more, but at least 3 years to actually get yourself prepared with the list that we're going to talk about today. So planning is the key. And when you're going, you have to know where you're going. Mm-hmm. So with this exit, whether you're going to close up shop, I hope not, you shouldn't, okay, or not, you want to know where you're going. So you got to plan where you're going. That's an important step.
You're absolutely right. But Holli, a lot of times exits happen because, and fire sales, quite frankly, in business happen because we didn't plan and we don't know that we're going to exit. And all of a sudden something happens in our life and we're caught unawares and we have to do something in the next couple of days or months. What about then?
I mean, that's the point of everybody should listen today, because all entrepreneurs should already be doing these things or not doing these things. And then they were always ready. You're always ready for the exit. So if that exit ramp comes sooner, you can find that ramp by having these things in place.
Okay, perfect. So let's get to the nitty gritty. What do we need in this plan?
Okay, so the number 2 is 99% of the financial statements for small to medium sized businesses are not ready to go out to market. So that's 99%. Now, Jen, I haven't found the 1% yet, but maybe it's what I do, but I haven't found it, but I'm going to leave room for error there. So 99%. And what I'm going to tell you is this. What's so important is whether you've got a good accountant, CPA, a good bookkeeper, or not, none of them are trained for a transaction. You are getting ready for a transaction. And so they need to be trained. And they're not. And so you are not maximizing your value. And let me give you an example or two that is really, really important. I had one client that came to me that was on the cash basis of accounting. And somebody, a private equity, had called and said, send me your financials. And unfortunately, he called me after he sent them, but we fixed them up. And so when I looked at it, he had a great bookkeeper. When I looked at it, he was growing astronomically, and he went from looking like he couldn't sell to having a loss to, which will happen when you're growing on the cash basis because your revenue, your cash isn't coming in until later. And so it's growing, and so we put him on the accrual basis, and automatically he was profitable, and it tells the true story. We're not making stuff up here, Jen. It's the true story, And so there's one more example I'd like to tell you because this is a good one. Accountants love to expense things, and accountants that are doing the tax return always expense things. You want lower taxes, so it's quite common to have different books as you grow. One book, one tax, and what I see is I had one client who had expensed a bunch of assets that actually needed to be on the balance sheet and depreciated. So when doing that, if your multiple is a 5, so most businesses are actually valued on a multiple of EBITDA, earnings before interest, taxes, depreciation, and amortization. So go with me here. If it's 100,000 that we should have put on the balance sheet times 5, that's $500,000 of value you left on the table. And that's true, real accounting. And so your accountant, your bookkeeper is not looking through the lens of the destination.
Yeah, and I'm gonna just put it out there. So many small businesses start with QuickBooks or something like QuickBooks, right? And there's nothing wrong with that.
No.
If you're just starting out and you're a small operator, but when somebody comes in to buy you, I buy businesses, and I sell businesses.
Yes.
So if somebody comes in to buy you and you show them a QuickBooks garbage,
right?
We hang it up and we don't consider, because it's not worth our time to go dig. On the buying side, if I'm going to look at your business and you're ready to sell to me and you have a viable business, but it doesn't show and it's a garbage books, like everything is like clumped together, I'm not going to do the work, because there's 10 other businesses who have fixed their books that I can look at it. It's clean. I can see very clearly what the picture is. It has the right numbers on not only the P&L but also the balance sheet. Why am I going to go through the effort of trying to dig through a QuickBooks jumble?
And I love that. So you bring up point 3, which is if you don't know what your EBITDA is, you need to have that in your book. So if your QuickBooks or any other software, it doesn't matter. The software doesn't matter. You should set up your books to have the EBITDA line. So when you get a P&L, whether it's in QuickBooks or not, a different system, you know exactly what your EBITDA is. And so if you don't know that, so a lot of entrepreneurs are, private equity's calling or somebody's calling them to sell. They don't know what that is. They're guessing. You cannot guess on this. You cannot guess. You have to maximize your value. This is probably the single biggest transaction of your life. It is worth it. And when I tell you, your accountant is not designed, CPAs are not designed for that, Jen. Did you know that? So my background is in a CPA. Unless you're a CPA that has done transactions, which means you've done mergers and acquisitions, your head isn't designed around maximizing value.
It's quite frankly designed around optimizing tax strategy.
Right, exactly.
And that's a totally different thing,
and
guys.
That is a different thing.
And that's why Holli said at the beginning, have a 3-year plan, because that's time for you to shift into, yes, guess what? You're going to pay more taxes. In the short term, you're going to pay more taxes.
Yes.
But the reality is your business is going to be worth so much more if you do this in the right manner. You're going to maximize the asset that is your business.
And I even want to say one more thing on that, because the entrepreneurs get scared about the taxes, okay? So, and I'm not a tax expert. However, I know enough to be very dangerous. And what I'll tell you about that statement is even when capitalizing some of these things, your book, particularly for equipment and things, assets in nature, your book and your tax records are different. So you can expense it and still not pay higher taxes on your tax return, but your books are telling the story that you want it to tell. And so I think we shouldn't shy away from taxes, because there are ways to navigate around that. And like I said, it's normal as you get to be bigger and you grow, you always have a different set of tax books and accounting books, particularly for assets that you acquire. And most people, because accountants don't like to track all that stuff and depreciate, it's a pain. You want to expense what you can. So that's why I'm saying there is like a mismatch of goals, and everybody should know the destination so that we're all on the same goals. And once you set up this foundation of the 7 things we're telling you today, you'll be ready regardless.
Fantastic. Unfortunately, we do have to take a quick break, but stick around because we are going to be right back after these messages. Welcome back to Power CEOs, the truth behind the business. We are here with Holli Moeini, and she is talking about the 7 mistakes that every entrepreneur must correct so that our businesses are not only ready for exit, but can function if something happens to us unexpectedly. We have to have a plan. Have a plan, know where you're going. If we don't have a plan, then we're doing it wrong. We're planning to fail. That was number 1. Number 2 was most businesses, 99% by Holli's estimate. I've never seen a perfect one, and I don't think she has either. Their books are not ready. They're not prepared. And that's okay, because as entrepreneurs, we don't know what we don't know. Then you must know your EBITDA. If you don't know what EBITDA is, Google is your friend, okay? Any business owner, as we grow, and it's okay. I come from medicine. They didn't teach us business in medical school. I had to learn this stuff too. I did it wrong for years before I learned these things. But if we don't know what our EBITDA is, we really don't know the health of our business and where our business is going. And so I'm going to kick it right back to you, Holli Moeini. What is the 4th thing we need to know about?
Okay, it's going to sound boring, Jen.
Oh, no.
So stay with me. Don't stop watching. This is important. Have you looked at your balance sheet?
Wait, what?
Yeah, exactly. So what I can tell you is, if your balance sheet is wrong, your P&L is wrong. That means your goal, you don't know what your goal, how quick you are to getting to your goal. You don't know. You don't know what your EBITDA is. And if your EBITDA isn't over 10%, you are not ready. You need to work on your business. So you don't know if you have 10% or not, because you haven't looked at your balance sheet. So I love that you brought up our education system. So I just want to say something about that, is that we go through school and we learn the capitals of all our states. Like, when do I need to know the capital of North Dakota? Okay, yet I don't graduate even college with financial acumen. I don't. And then we have these brilliant people that go start a business and they don't understand the flow of money. And so that's why I'm saying that if you don't look at your balance sheet, that is a 100% indicator that the financial acumen, we need to improve that. Because, Jen, what I see on our SMB's books are, this is classic on QuickBooks, it's undeposited funds. Well, what is that? And then it grows every year. Well, why is that? And that's probably an expense that needs to be on your P&L that has just reduced your EBITDA. So you don't know where you're at if you don't know your balance sheet. And Warren Buffett said this, that the business language is accounting. And I know it's not sexy. I know most entrepreneurs tell me it's the worst thing, but it is a foundational piece that needs to happen. So you have to look at your balance sheet. What do you think about that, Jen?
Yeah, so I'm gonna just echo what you said, because the reality is I've coached thousands of entrepreneurs, and most of my entrepreneurs are highly educated people. They're engineers, they're attorneys, they're doctors or healthcare providers. And the reality is, I have asked them about their numbers because I'm their business coach or their business strategist, and I need to see their books, and I have to have an understanding. And when I ask them where's your balance sheet, they go, "What's that?" This is big
I know.
deer in headlights. Look, what is that?
Can you imagine what I find in there?
I know. And so what I want to say, if you're listening to this and you're like, balance sheet, EBITDA, I don't know what's happening here. What are these? Are they speaking Greek? What's happening? It's time for you to start learning what you don't know, because the most dangerous thing in business, Holly, is not knowing. We don't know what we don't know because we never learned it.
That's right.
And so it's so incredibly important. Yes, ladies and gentlemen, it's not sexy. Knowing our EBITDA, looking at our numbers, it stinks. I hate it. I'm good at it. I was gifted in math and numbers, but I hate it. It's like pulling teeth every week when I look at all of my numbers across the businesses and what's happening. But the reality is that's the only way we have a real idea and we have a finger on the pulse that is our business. Because you're right, money is a flow of business. And so dumb it down just a little bit for those who are deer in the headlights. What's a balance sheet? What is it? How do we ask for it? Because as entrepreneurs, we don't want to admit we don't know things either. That's another dangerous aspect.
I love that. So your monthly financial statements should always include a balance sheet and an income statement. And if you're on the accrual basis, it needs to have a cash flow statement. We haven't talked about that. But if you're on the accrual, you must have that. So there's a set of 3. If you're on cash basis, it's just balance sheet, which is a point in time. And your income statement, or your P&L, which is referred to lovingly, and what every CEO likes to look at, is the P&L. And so that's for a period of time that you have it. So you should be looking at this monthly. There should be a discipline and a rigor around this, and hold your accountant to getting it done on time. I hear this time and time again. I heard it last week from a client that said, is it reasonable to get my financial statements by the 20th? And I said, well, you're the customer. You should get it at, the second day 2 or day 3, you should ask for it. So I think it's really important to get all those financial statements and know what you're looking at and ask questions. So I think building that financial acumen is a really important thing to do. And these are things every entrepreneur needs to do now. You do not want to wait. Everybody should do it now. So thank you for asking that. Should we go on to the next one?
I would say yes. However,
yes.
I want to dive into this a little bit deeper. It is not okay, folks, for you to be in June and just now getting your prior year documentation. Can you address that? Because a lot of business owners, they're just doing what they do, especially in small business, especially if they're professional. Like, I'm a lawyer, I'm lawyering, my accountant's handling all that, and they filed an extension so I don't have to worry about last year's information. Wrong. Wrong.
Yes.
Can you speak a little bit about what is it that we need so that we can make sure we can make those game time decisions before it's in the books?
Okay, listen, that is a mindset shift. Okay, so let's shift your mind, all entrepreneurs. And so the reason for that is, and I see it time and time again, is because our entrepreneurs are really inspired by the taxes. So they wait for the CPA to do adjustments and accounting things until I have clients. Yeah, I have clients with moving numbers, and I thought, well, that was wrong. Well, now they corrected it, and I'm like, well, what's happening? So the mindset shift is that you are running a business. You want your financial statements to be accurate on a timely basis so that you can make the proper decisions. And Jen, this is so important for growing and scaling your company. We have these entrepreneurs. You can't do that and make great decisions if you don't. So the mindset shift is let taxes be taxes, and let my books be accurate, and let me put in place a foundation to create a foundation, so not only accurate accounting records, but we also want to have the discipline of review. And then if your accountant isn't answering the questions to your satisfaction,
get a new one.
That's right. They have to be clear about it. That's right. 100%.
We are consumers. I think that's something that we lose sight of in business. We're just doing all the things, and it's not our job to chase after our accountants to give us what we need to run our business. So if you're not getting your monthly accounting in a timely fashion, and I'm not so bad as the second, I'm like, you should have it by the 5th.
That's great.
I'm like, you should have it by the 5th. If I'm not getting it by the 5th, I'm firing you.
Right.
I'm firing you. You may not do my monthly bookkeeping anymore. If I don't have an understanding come April 15th of what my tax liability is going to be, I don't care if you're going to file an extension. I always have to file an extension, by the way, always, because there's just so much going on, and I don't even have everything I need for taxes in time because it relies on other people. But if I don't have an accurate snapshot of what my business actually did and have some sort of an estimate of what I'm looking at, that's unacceptable.
That's right.
It's completely unacceptable, because that means that by the time they get their stuff together and I look at it, half the year is gone. And if I have to make some adjustments, I now can't make game time decisions. I've now had a plan that wasn't working, and I didn't know it wasn't working because I didn't have my books.
Yeah, I want to go back to something you said that I see a recurring theme in my clients. And that theme is that they, let me put it this way, I'm like, how do I put this? So we as entrepreneurs will hold ourselves to the highest of standards, but somehow when it comes to your accountant, we will make excuses for not getting things on time, their loyalty. So last week I had a client that said, I looked at their records and I knew they were wrong. And I think that's unacceptable.
Yeah.
And they're trying to grow and scale. And so I said, I'm going to tell you, I don't think you have accurate accounting. We need to fix that. And they're like, we're loyal. It's hard to move. It is not hard to move. And loyalty, you can be friends and go out together later. It is not okay to not have good records. And if you're not going to hold yourself to that, you should hold them to the same standard you hold yourself to.
Absolutely.
The same standard. And I see it time again. And I think it's because I thought about, why is this? I think it's because your financial acumen may not be there. You make excuses because you don't think they can do it by the second day. I closed a $200 million international company in 2 days. And it's a mindset shift as an accountant.
Yeah, and I think I'm going to add to that. I'm going to add to that as an entrepreneur. It's uncomfortable to talk about money. A lot of us still have this discomfort around speaking about money, and we don't want too many people in looking at our money to know that, because we're very private people in a lot of ways. So I think there's a lot of reasons why we don't take the action that we need. But if you're not listening and you didn't hear Holli loud enough, I am repeating to you. Today is the day to hold your accountants accountable. Make sure that your record keeping is on point. We do have to take a brief break, but we will be right back after these messages. Welcome back to Power CEOs, the truth behind the business. If you're just tuning in, you're going to want to go to nowmedia.tv, go to shows, click on Power CEOs, and catch the first half of today's episode. Why? Because Holli Moeini, financial executive extraordinaire, is dropping pure genius upon us when it comes to getting our money in order, our financials in order. And after all, that's the lifeblood of our business. And how do we grow and scale if we don't know what's happening in the money? So we are going to dive right back in without further ado. We have talked about a lot, Holli. You have given us 4, I believe, of the 7 mistakes that almost all, if not all, entrepreneurs make. What's number 5?
Number 5 is know the story that your financial statements are telling. Your financial statements, which is the balance sheet, the P&L, the cash flow if you're accrual, tell a story. So we don't want that story to be a mystery genre or a sci-fi. We want it to be a hero's journey, a journey of growth, a journey of you as the hero, as the entrepreneur who goes through trials and tribulations. You learn from your mistakes, and then you come out with this glorious path of EBITDA. You want that path. And so it's a growth story. So people that are going to buy your business want a story about growth. And it's not that you have to be perfect. You just want your financials to reflect actually what's happening and tell the story that's accurate. And we want that to be the hero's journey, Jen. That's really important. And people don't look at financial statements as a story, but I'm telling you, they tell the story every time. And
we actually had a real life example of that not too long ago. We had a global pandemic. Anybody who was brick and mortar had a really tough time in 2020. Let's not make any mistake about it. If you were brick and mortar, your books showed a devastating story. Not as devastating in places like Texas and Florida where we opened up pretty rapidly, but in some other states it was pretty rocky for a long time. There was a lot of capital expense into digitalization. There was a lot of lost revenue. It just was a different story than what we were accustomed to. Some very successful business owners, and we had to deal with this crisis. And so that shows up in the numbers. But how do we tell the story of learning and growth when we're in that trudge?
Yeah, well, so I want to address that during the pandemic and then years after, because we look at businesses for 3 years and a total trailing 12 months, wherever you're at in the calendar. And so during the pandemic, I was a buyer during that period of time. And so I wanted to, and in fact, I bought companies in the middle of the pandemic. And it was fine, but coming out of the pandemic, so I'd want to see what is their story around the rebound, because entrepreneurs did rebound. And what did they do? And they tried to put the PPP loan in the revenue
in the
line,
wrong place.
right? So you've got to get rid of all miscellaneous income to the bottom line below EBITDA. But beyond that, we looked at the story again. So the story you want is the story of growth. We love double-digit growth. Now, we don't want to just grow our top line of revenue. That's why I'm encouraging you on whatever item that is to get your EBITDA on your income statement so you know where you're going. So if you're growing your top line, and I'm seeing this a lot right now, Jen, is if you're growing your top line and your bottom line is stable or shrinking, your SG&A, selling general administrative, and people also call that operating expenses, that is getting too large and needs to be addressed. And so you can look at that as a metric of less than 20% of revenue should not be in SG&A. So what I'm seeing in clients is 40%, 35%. Everything over, and what's happened is they need to create efficiencies and things of that nature. So when I, as a buyer, would look at your financial statements, I'm going to see, do you have over 10%, EBITDA? I want to have over that. And then if your SG&A is high, I'm going to be interested in what that is and figure that out. You want to make sure you carve out all your personal expenses, but the story is there. It's in the financial statements, and you want to make sure of being able to tell that story.
Yeah, absolutely. And as a buyer and a seller, I concur with you. And when I look, I do a quick pass. And if you don't meet my metrics, I'm passing on you. You could be the best business since sliced bread, and if your numbers aren't, if your balance sheet and your, I call it a P&L, sorry, your income statement, if it's not right, I'm passing, because I am in the hunt for the business that is healthy, that is growing, that I can take to the next level, because that's my skill set, is scaling businesses. I am a business strategist. I know how to create even more efficiencies. I know how to do that, and I want to look at something and know that I at least am starting with a healthy baseline. So if you've got everything junked in, it's the same thing.
Yeah.
It's like, I don't want to be the detective and understand why you've got a 40% SG&A.
No.
I don't have time for that as a buyer.
No. And so what I do is I always carve those things out, Jen, so you see a proper financial statement. And I'll tell you what's interesting is when you are a seller or a buyer, usually a quality of earnings by an external CPA firm happens. They are a CPA firm always, and they write a report. It's not an audit, but they prove your cash flow and things of that nature. So I had the pleasure of being able to review one of those, and my client wasn't my client at the time, but they were showing me this, and what had happened was they hired the firm to do a quality of earnings. And it was a great report, everything was good, and all I did was take one look at their financial statements, and they had professional and consulting expenses too high. And I was like, what's in there? And I found $200,000 of non-reoccurring type things, like you're paying for me, like I'm non-reoccurring, no private equity would need Holli. Okay, so to continue, so there were all these things, and at a multiple of 5, easy math, that's $1 million of value, and they got a quality of earnings. So this is important to know, that not everybody is watching out for you. You have to educate yourself and watch out for yourself.
Absolutely. I couldn't agree more. And when we arm ourselves with education, when we learn the things that we don't like, listen, I don't like it either, folks. But I don't need to be the accountant. I just need to know enough to make sure that I'm on track. And honestly, Holly, I'm going to ask your opinion on this because this is something I tell all my clients. Yep. If you haven't had an audit of your bookkeeping or an audit, a different CPA, take a look at what's happening in your business. And I say every 2 years, you might be doing it wrong because so many times I see that companies get lax or the quality goes down or something's not right. And when you have that independent audit, it's fresh eyes. It's almost like they get projectized, or maybe they've had turnover. I don't know. But I like that independent oversight as a business owner every 2 years of another accounting firm. What are your thoughts on that?
Yeah, so the reason why that is, so my background is a CPA. So I was a CPA and an auditor for almost 10 years. And so the reason why entrepreneurs don't do that is because it's expensive and it's pain. And so nobody wants to do that and cause an extra 10,000, 5,000, whatever it is. It's expensive and it's painful. And so people don't want to do that. And so I have to be careful how I say this because I don't hold myself out as a CPA in a CPA firm. I was in a CPA firm for years and I've been doing this for 35 years, right? So I don't want to say that, but what is important is exactly what you brought up. Get somebody you trust that has the background. Doesn't have to be a CPA firm. It could be somebody you trust that's been doing it for a while, and have them take an initial review. A review, I can see things in a one-time review and say, okay, you need to change this, this, and this. And if you have a really good bookkeeper, they can take that and run with it. You don't need to have me forever. And it wasn't painful. I didn't, like when you do an audit, they have to look at every bank trend. There's things you have to do, right? You know these things. Like if you've never had one, you don't want to know these things. If you don't, the only reason you get an audit is for either transaction, for a variety of reasons. Usually it's because of debt. You have debt, and so the bank is requiring it. But I do think, to your magnificent point, I'm going to say this, every entrepreneur's small to medium-sized business should have somebody take a look at it. And the other thing that I can see right away is if they have a good or a bad accountant. I know. And there are so many not good accountants out there, and you pay valuable money for that. You need to get the quality and not make excuses, right?
You're absolutely right. And something that is disturbing, there's been a lot of roll-up in the accounting firms.
Yes.
There's been a lot of turnover. Yes. And this actually happened to me. I had my bookkeeping being done. It was on point. They had a roll-up. It became another company. They changed the bookkeeper. They switched things and completely messed up my books. Now, if I was unsavvy and I didn't educate myself and look, I would have never known.
Yes.
I mean, and it was a huge tax implication. It's something that we need to look at because we don't know. Oh, and of course, what did they say? They're new. They just onboarded. There is no excuse for bad bookkeeping, especially when they go in and change your categories that have been set up.
Right? Yes.
So this is why it's important. We may sound like we're on a soapbox here, but it's because it matters. If we're paying money to somebody to do our monthly bookkeeping, to do our accounting for us, we need it to be accurate. We want to know that it's right because that's how we know how we're doing. It's how we keep our pulse on our business. We do have to take a brief break, but we will be back after these messages. Welcome back to Power CEOs, the truth behind the business. And yes, we are talking about something uber sexy in business. Financials, money, accounting, and the 7 mistakes almost all entrepreneurs make at some point in time and how to correct them. I am here with Holli Moeini. She is a guru at this. She is an executive, CFO, lots of experience in mergers and acquisitions. Holli, we've been through 5 of those mistakes. Give me the 6th.
Number 6 is over-reliance on you for decision making. So I see this being a problem to sell. I see this as a problem to scale. I see this as a bottleneck, and I bet you do too. So an over-reliance on you. So if you make all the decisions, it's an issue. So buyers want to see a couple things, depending on the market, depending on the buyer. But they want to see that you have a management team that's capable of running the business. Some buyers don't want to stay and run the business. They just want to invest. And then the other thing I see is you work too many hours, okay? And so then the buyer says, well, I only want to work 20 hours a week. And so it limits you if you are the person in every way. It doesn't just limit your current exit, it limits your future exit because you're not growing, you're not scaling like you should. So I see this time and time again. And everywhere I go, I was talking to a business owner last night, and when I heard her story, she does the bookkeeping. Okay, if you do the bookkeeping, that's a problem as a CEO. You're not going to grow and scale as you should. That is low value work for you. It's high value for the bookkeeper and not the best for you. You need to focus on growing and scaling the company, and that's hard sometimes. I bet you've seen this as well.
Oh girl, this is the number one mistake that entrepreneurs make. I don't care whether they are a solopreneur, just a startup, or if they are, 25, 150 employees in. Entrepreneurs, listen up. It's time to let go. We must let go of control and hire people smarter than us. Build the team that is greater than the sum of all of our parts and empower our people to make decisions. Because if something happens to me and I have not done that, guess what happens to the business? Wah, 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 down the tubes. Right? Because nothing can happen.
100%.
It's so incredibly important that you develop that team. You have that team because it not only frees you up for exit, but guess what? You can go on vacation. You can take time away. You don't have to be grueling forever. Now, if you're just starting up, yes, I get it. You're not there yet. But start thinking about, and I like the stop doing list. Make your stop doing list. What are all of those low value, mundane, I have to do tasks that I'm not really good at, that are easy to delegate? And yes, bookkeeping is one of them. Social media is one of them. You have to know what you're marketing, but have someone else develop all the things. If you're sitting there in Canva making a bunch of things, you're doing it wrong. Let's empower other people and focus on what we need to do as entrepreneurs, which is set our vision, drive our business forward, understand where we're going, and make strategic alliances. So we are 70% of our time shaking hands and kissing babies, meeting new people, developing relationships, developing alliances, so we can actually grow and scale. And guess what? I like to take time off. I like to travel. I don't want to be glued to the business. And by the way, when you have multiple businesses, you don't have the time for that anyway. So how do we start that process today in your mind? Because I guarantee you, every person who's listening to this, they're hanging on to something they shouldn't be.
Oh, I love your stop doing list. It is so good. I love that. I think it's inch by inch. Just start with the worst thing, which is always accounting, right? For the entrepreneur. So start with that, and that needs to be hired out. That is not expensive. You're usually not the best accountant because you're doing other things. You're a doctor, you're other things. So that's the first thing I would do. But that's why our discussion today is so very important, because these things that we're talking today, these 7 things, are important for you to grow and scale your company and just be ready. These are foundational principles that everyone should do. And so I think that that's really important.
And Holli, before we move on to number 7, which I know you're dying to give us, something that I'll say is, and this is something that I coach almost everyone on, exit your role. You don't have to give it up, but put other key people in place doing that, and then you get to pick and choose. I cherry pick who I coach. I have a team. I cherry pick my consulting or my boards that I'm sitting on, where I'm doing advisory. I cherry pick that and allow my team to do that so that I can do the things that I love and I'm best at. And if you do that, it's not like you're not going to be able to still be a doctor or a lawyer or whatever it is that you love doing. Just replace yourself and then reinsert yourself and pick and choose and work the hours that you want and do the things that you want. It frees you up. So give me number 7.
Okay, number 7 is aligning your business around what the current market opportunities are, the desired market. And so, because you want to make yourself attractive to that market, and you need to know what is attractive for that market. And so I even think that you should go early to a broker or a professional and have them do the assessment, because there are things that you can do. For example, if you're project-based, when you're selling, buyers like more subscription, ongoing income. There are things you can do and pivots you can make. If you have a concentration in, a customer, let's minimize that. Let's not sell less, let's just grow more and grow other areas and place that focus. There are ways to make ourselves more attractive, and that takes time. It's not an overnight thing. And so finding out, and I can't address specifically all the things because it depends on your industry, and I'm not a broker, but I would, if I'm selling my company, I definitely would get some advice from a broker. Go early, and they'll do an assessment and evaluation, and then you work towards making that attractive. Because here's the thing, Jen, here's the thing. If it's attractive to a buyer, it's going to be bringing you more value. It's going to make you freer mentally. All these things that we said today is making you better and making your business better. And so it's super important to make your business attractive. That's what I say.
Absolutely, I couldn't agree more. And there are professionals for that. There's professionals can help with that. You can go get that assessment. I often send people to a broker and they come back and they're like, oh my gosh, I didn't hear this. I'm like, yeah, I've been saying that to you for the past year as your business coach, your advisor, your consultant, what have you. It depends on what role. But when you hear it from a broker, it's another set of eyeballs. It's a fresh set of eyeballs, and they are tuned in because they sell and buy. They broker these deals. So they know what's happening in the market. A good one knows what's happening in the market. So do your research. Go to somebody who's got a lot of experience in your space and reputation that upholds to that scrutiny, and understand where you are. Because once again, as Holli said, have a plan. If we've got a 3-year plan and we go get that assessment, we can actually optimize our greatest asset, which is our business. Yes. All right, Holli, we've been over a lot today.
All 7 and then some.
I'm telling you, you have just dropped absolute gold. Before I forget, how can people reach out to you? How can they get in touch with you if they want to learn more? Maybe they need some help on the financial side and could use that financial strategist eyeballs. Yeah. How can they reach out to you?
I love that. So you can find me at hollimoeini.com. And you can schedule just a free discovery session. So oftentimes that's been really helpful because I can do an assessment very quick to see where you're at, and then you know where to go with all these 7 things and probably more, And so yes, reach out to me, schedule an appointment. I'd love to meet you, and that's the best way to go.
Okay, so we've been through a lot.
Yep.
Now people know how to reach out to you. And listen, guys, I refer people to Holli all the time. I'm in this industry, and it takes a village. It takes a village. Holli, last quick 2-minute, this is 2-second. This is the action you take today that's going to move you forward in this aspect for all our entrepreneurs listening.
The action you're going to take today is, besides write down these 7 things and commit to them, I want you to take a look at your financial statements and see if you understand them and tell the story. If you don't, reach out and get help. But that is the first thing. Learn all 7, do them, and you will be in good shape to either, retire with a nice fund or whatever your destination takes you. And so I think it's really important to start now, look at your balance sheet, look at your financial statements, and that includes the P&L as well.
Thank you so much for your time and your expertise. It's really been awesome having you here today. Thank you, Holli.
Thank you, Jen. Thanks for having me.
Absolutely. And you, yes, you, it is time to take action. Holli challenged you. You have heard the 7 steps. Have a plan is the first one. If you're sitting there, and I know that many of you are, because I have been coaching for a very long time, and I have yet in years, over a decade, I have yet to have a business owner who has an exit plan in place. So I know, even if you think you know, if it's not in writing and it's not documented and you're not actioning this item, that is your first step. I challenge you to look at your exit strategy. Yes, I know you love this. You're going to do this until, the day that you can't anymore, but we have to have a plan in place. That's your action step today. Look at your plan. Is it relevant? Is it real? Is it aligned with where you want to go? That's the action you take right now, not tomorrow, not next week, but right now. Because if you wait, nothing gets done. Today is the day we move our businesses powerfully forward. Once you've done that, follow the rest of Holli's step in sequential order. Learn, educate yourself. It's okay. We don't know what we don't know. But that's also dangerous. So it's time to start. Let's start with our finances, get it in order. So you're going to take action right now, not tomorrow and not next week. And I want to hear about it. Send me something on social. Hit me up on LinkedIn. Hit me up on Facebook. Send me a message. Let me know what you thought, how you're taking action. Let's hold each other accountable. Unfortunately, all good things do come to an end, including this show. But the good news is we'll be back here, same time, same station next week. So until then, win today, win this week, and I'll see you next time.
This has been a Now Media Networks feature presentation. All rights reserved.